Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, September 12th. In this episode, we recap the CPI report and tell you what it means for the Fed. Then, I'll go over the Starbucks CEO's new plan. Finally, why is Warren Buffett selling billions of dollars in bank stocks? Stocks were up for the third day in a row as this week is off to a great start. The index was probably helped by tech stocks having a nice day yesterday. Oracle saw an 11% jump thanks to some solid earnings, Nvidia is up 8%, and the rest of the Mag 7 also had great days. But now, the markets turned their attention to the CPI report. The report dropped yesterday morning, and it's pretty good. The CPI in August was 2.5% year over year, which is less than the 2.6% expected, and less than the 2.9% that was in July. So inflation continues to cool, and now it's at its lowest level since February of 2021. And then looking at core CPI, which some people like to focus on more because it removes volatile prices like food and energy, and that came in at 3.2%, which was in line with expectations. So overall, this is more data showing that inflation continues to cool. And now the ball is in the Fed's court. We have to wait and see what they do, but we know we're getting rate cuts next week. Right now, the markets are pricing in an 85% chance of a 25 basis point cut. Yesterday was the first presidential debate. And a quick fun fact, over $800 million has been bet on the US election since June. That number is going to get bigger because that $800 million in betting has been taking place on offshore websites because betting on elections hasn't been legal in the US. But this week, a court in the US overturned a betting ban on US elections. So now people in the US can directly make money on who's going to win the election. Starbucks' new Hall of Fame CEO officially started his role as CEO this week, and he already has a plan to turn the company around. Brian Nichols published an open letter to employees and shareholders on how he plans to turn around the company. He wants the company to refocus on welcoming coffee houses where people gather and drink coffee, handcrafted by skilled baristas. Nichols said that during his first 100 days, he'll spend time in stores and at the company's support centers, meeting with key partners and suppliers. He highlighted that stores will be inviting places with comfortable seating, thoughtful design, and clear distinction between to-go and for-here service. This would be a switch from what has been happening at Starbucks post-pandemic. Currently, Starbucks is emphasizing drive-thru pickup and delivery options, but he wants that to change and to become a welcoming environment where individuals can relax, connect, and enjoy the Starbucks experience. Starbucks is up 19% over the last 6 weeks as investors have bet on the chain's ability to return to its former glory. Markets aren't feeling so optimistic about big banks right now, and it might have something to do with some of the comments from executives from these banks. For example, JP Morgan stock fell the most in 4 years yesterday after their president said the projections for the company's earnings are too optimistic. That followed comments from Goldman Sachs' CEO who said that their trading revenue is on track to drop 10% in Q3. That's a bit of a turnaround because banks and finance stocks have been some of the best performing this year. In fact, the S&P's finance sector is up more than 17% year to date. Warren Buffett has been dumping billions of dollars of Bank of America stocks over the last few weeks. Since mid-July, he sold more than $7 billion in Bank of America stock. That's all the business headlines I have for you. Let's take a look at some stocks making moves. GameStop is down this morning after they reported disappointing earnings. The company reported revenue declines of over 31%, which is more than what analysts expected. The company also disclosed a stock offering of up to 20 million shares, so that's not great. The stock is down around 15% in reaction to these earnings. That's all for today's show. Keep navigating those waters and see you tomorrow.